Guys, I'm looking for the elusive meatball who only comes out if I say Vlad Tenev's favorite thing to say, the CEO of Robinhood. When I was a young boy in Bulgaria... There he is. How's it going, guys? My name is Andrew, this is Professor Meatball, and today we are going to talk directly to the fact that AMC is blasting off to the moon. Has something to do with this statement from AMC Theaters' very own statement on the new policy that movie theaters will be able to open in about 2 weeks at 25% capacity. That is humongous. We're also going to do policy. We're also going to read a little bit of the technical analysis that I've done previously about exactly what price points I think AMC will need to hit in order to actually blast fully off into the stratosphere. And finally, we're going to do a little bit of DD about exactly why AMC still holds up as a stock to end all stonks. And if you guys like this video, I just recently surpassed 10,000. I want to thank each and every single one of you. If you guys have the time, I would really appreciate a quick tap of the like button and help me to the journey of 20,000 subscribers. That would be amazing for you guys and for Meatball as well. Thank you guys so much. And with that out of the way, let's start with the technical analysis. Now, I'm a data scientist here in Silicon Valley. My business is not directly the course of stocks. That's why every single thing I want to say on this channel is my opinion only, not for financial advice. Now, we are seeing that AMC is currently holding strong at 6.55 cents, and after hours has actually grown to 6.73 cents. Now, this is up 14.91% on the day, and right now we're looking at the daily chart, right? So let's start with our technical analysis. The first thing you'll notice is that AMC has a lot of red candles on the daily chart. That's because it is zoomed out far enough that we could see all of the bad business that happened during January, the great rise and then the great dip. Now, if you are a bag holder for these meme stocks like me, go ahead and shout yourself out in the comments below so that we can all find out a little bit more about ourselves. The stock trading app that I'm using here is called Webull, and if you want to get your hands on this stock trading app tool, it is entirely free, and you can click the description down below in order to get it yourself. Now, one of the things about AMC is that we have some of these lines here. One of the purple lines. Now, the thing that we want to focus on in terms of AMC is that we have that purple line, which is the exponential moving average 200-day, which helps us give us a macro view of exactly what's going to happen to AMC in terms of bullish and bearish momentum. We also have the dark blue line, which is going to be able to help us understand a micro view. This is the 15-day moving average. And right down here below, we have the relative strength index, one of the best indicators of bullish and bearish momentum. On the daily chart, you can't really see a lot. This is very confusing to see. So what we want to do is focus a little bit in. Let's look at the 30-minute chart, and you see here that I have drawn 4 horizontal lines at the points of technical resistance and support. Now, support is exactly when a stock bounces off a price, and resistance is when a stock is rejected by a certain price point. And we see that future resistances become supports or vice versa, and that is the crux of what we are tracking here. Now the last time the AMC was able to burst through 6.57, that was pretty darn while ago. It's about 2 weeks now, in February 10th, and now the next point of resistance to beat is this $8 point. Now, a lot of people can say that, well, this could also be a level of resistance here. However, I would say that $6.87 is more of a blip in AMC's journey. The actual point of resistance that we were trying to beat is back on the 5th of February, and that is the $8 mark. If AMC does blow past that $8 mark, go another 10.5% upwards, then we were going to see some fireworks light up, ladies and gentlemen. You have to be very careful, because as of right now, even after hours, the AMC RSI, the relative strength index, is crossing over 70, which means right now it is oversold. So be careful when you are venturing into the world of AMC at this moment. However, I am pretty bullish on AMC. If you guys join me on my live stream, I will show you whether or not I'm willing to add AMC to my portfolio and double down like DFV. Now, a couple of DD about AMC before we move on to the news. In today's data-driven DD, we're analyzing the fundamentals of one of the meme stocks that has briefly mooned in the past few weeks by Wall Street bets and now has reverted back to its pre-meme level, and it is starting to rise up as well. So first of all, I want to look at their 10Q. So you can look onto the SEC actual website, and you can look at all of the AMC information right here. I will link this down below for you guys to take another closer look at, but the main takeaways is right here. Income statement, revenue, 120 million, 85 25% year over year. Operating expenses, $795 million, 39% year over year. Net loss, $906 million. Balance sheet, cash equivalents, current assets, current liabilities, total liabilities, and total equity, which is deficit. Obviously, a lot of things have happened since then, and we'll get to that, but the latest available financial position was to see how bad it was getting. So the notes and forward guidance is the part that we really want to look at. Refinanced 87% of their outstanding bonds for bonds due 2026 for higher interest bonds with a principal reduction of $555 million. Lenders have given relief from maintenance covenants in their bonds temporarily. Will need to increase cash flow or EBITDA back to a sufficient level by the end of March when the relief ends to be in compliance with the covenants, or else the bondholders can make the bonds payable due immediately unless lenders agree to extend it. Cash burn is now $388 million during Q3. Expects rent to be drastically increased starting in 2021 due to the expiration of rent deferrals, and then $600 million in convertible debt to Silver Lake and $335 million in EBITDA in Q3. So main point here that we bolded here, expected to run out of cash by the end of 2020 or the beginning of 2021, will require a sudden source of liquidity or increase in theater attendance not to go bankrupt. That is where at the end of the video we're going to cover exactly what the breaking news is and AMC's position and their official statement. The recent events that happened in the last week, the last point can basically sum up the important part of the 10Q, that they're basically exhausted all possible sources of liquidity and they would have most likely gone bankrupt sometime early in this year, 2021. They have a massive net deficit of $2.3 billion, which means that it would have been extremely likely that the shareholders would have been left with nothing in the case of bankruptcy. Even if their liquidity issues weren't going to be immediately force them into bankruptcy, their inability to meet their debt covenants when they expire at the end of March would have likely put them in default if lenders gave up hope and started cutting their losses. All of this meant that literally every hedge fund analyst looking at this would have recommended their fund to go short for AMC. And if you're looking for a definition on short, check out a couple of the videos that I talked about in terms of GameStop and the shorting fiasco there. It was obvious that they were about to go bankrupt. Their management even stated this as such in the most recent financial statements. This is why AMC ended up with a 69% short interest float short at the end of 2020. It seems like the most obvious thing in the world, and AMC bottled out at a less than $2 when all seemed lost and the intrinsic value of the stock was $0 in every analyst's mind. Except that you've learned the hard way, even if the fundamentals and financials point to an obvious bankruptcy is coming, it's been a weird year and anything can happen. Specifically two things. Silver Lake converted all of their $600 million Specifically two things. Silver Lake converted all of their $600 million of debt to 44 million shares during AMC's spike, and then two, it raised $917 million in cash from debt and equity. That's 165 million shares issued. Assuming the cash burn remained at the same levels as Q3, which is the worst case scenario, as states are much more likely to relax restrictions this year with vaccinations rolling out, this cash should last them all the way into Q4 2021. This also makes it much more likely that the debt holders would extend their debt covenant waivers now that imminent bankruptcy is off the table. Wall Street Bets had effectively saved AMC from bankruptcy. Today, AMC is two mispricings that lends it to a high probability play. As of March 12th, which was a week ago, AMC was at $5.59, which is barely double the share price of it back when it seemed to be approaching near a certain imminent bankruptcy in a few weeks. Two, the implied volatility of the put options are still extremely high based on the recent price action. So there are a couple of examples here. Furthermore, as of 129 data, there's still 38 million shares short, meaning that there are not many funds that are actually shorting AMC actually covered yet. Of course, because AMC was printing new shares like they were Jay Powell trying to print themselves out of bankruptcy, the short interest went down to 15% of float, meaning it'll be very unlikely to see another short squeeze. Thesis: the stock is fundamentally undervalued at a market cap of $2 billion and a share value of $550 based on historical pricing. Anyone doing an actual DCF analysis would say that the equity is worth negative dollars because debt is greater than EV. They were last at this price in late September when the uncertainty of their ability to survive another wave of lockdowns and was $4.50 at late November, literally a month before they stated in their 10Q that they've already released that they would run out of cash and go bankrupt. Compared to this, it makes no sense for the stock to be at $550 now, that it's extremely likely that AMC will not go bankrupt. Two, the implied volatility on the put side is insanely high, especially if you consider that AMC is likely undervalued and hedge funds probably aren't going to be adding additional shorts of AMC at this price, especially after seeing what happened to it a few weeks ago. So Here's the play. To take advantage of the mispricings, this Redditor has been short cash-covered puts on AMC on $5 and $6 strike prices for February, March, and April. Strike prices for February, March, and April expiries since last week. Theta decay and decreasing IV has caused the prices of these puts to go down substantially, but in their opinion, it's still ridiculously they're still ridiculously overpriced. For example, to lose money on selling $5.50 puts expiring in a few days, AMC will need to go down to $5.15, almost 10% down. For March and April ATM puts, AMC would need to go down $4.50 to lose money, which is below the share price of AMC when bankruptcy was imminent. And if AMC stays above $5.50 by that time, you'll be making 21% return in 1 month. Now that said, the simplest position that you could go with is a simple long position, buying AMC and holding it to the moon. However, none of this is meant to be financial advice. In fact, I will give you the opposite of financial advice, which is a careful advice. Be very careful when playing with these volatile, risky bets, especially as the market is closing in on a bubble burst. However, I want to be able to make sure that you guys understand that AMC itself has a statement on the movie theaters reopening in New York City. In the response of the announcement that movie theaters can reopen in New York City, Adam Aron, the CEO and president of AMC, today issued the following statement. Governor Cuomo's announcement that movie theaters can reopen in New York City in the first week of March is another important step towards restoring the health of the movie theater industry and for our company, AMC. We are excited to announce that AMC, the largest movie theater exhibitor in New York City, will reopen all 13 of their theaters in New York City beginning March 5th. That's only in 2 weeks. So they will do so with the highest devotion in the health and safety of their guests and associates through their AMC Safe and Clean policies and protocols, which are developed in consultation with Clorox and current and former faculty of the prestigious Harvard University School of Public Health. AMC Safe and Clean includes social distancing and automatic seat blocking with each auditorium, mandatory mask wearing, and upgraded air filtration with MERV 13 air filters, as well as many other important health, sanitation, and cleanliness efforts. Aron's continued since reopening our first theaters in AMC Safe and Clean in August. AMC has welcomed back nearly 10 million moviegoers nationwide without a single reported case of COVID-19 transmission among moviegoers at their theaters. They look forward to welcoming back their New York City's guests to the big seats, big sounds, and big screens that are only possible at a movie theater. So a little bit more information about exactly what AMC Safe and Clean is right here. It's a lot of HEPA vacuums and MERV 13 filters. There's guest and associate safety protocols and mandatory mask wearing, of course. There you can also find more about it in amctheaters.com/AMC-safe-and-clean. AMC, and then a little bit more information about AMC and the person that wrote this Yahoo Finance article. I think that this basically says it all. If you guys are in AMC and haven't yet moved your positions yet, you have now the chance to rejoice. The tendies are close. Be very careful as you continue on this route. And if you guys want to understand a little bit more about the market, a little bit more about investments, and how to really passively earn as much money as you can in your 20s, 30s, and 40s and beyond, then go ahead and like this video for the YouTube algorithm, subscribe to this video, go ahead and click one of the links below for your BlockFi $250 free Bitcoin or 2 free stocks on Webull to use the same analysis app that I use. And for now, but not for forever, I'll see you guys next time. Peace.